During our midday call today to discuss ideas, Dan also flagged the action in oil prices. They're now down over 7% in just a week and almost 9% since mid-July. So let's take a deeper dive now into crude oil and the rest of the commodity complex outside of just gold. Francisco Blanch of Bank of America does a lot of work with those commodities. Francisco, thank you very much for being with us. Let's talk about the oil trade and what's got you a little bit piqued in terms of interest for what's happening with crude.
Hey, thanks for having me. Look, I think the commodities complex is pretty straightforward. You have some mean-reverting commodities like oil, gas, but also corn, wheat, and then you have trending commodities. You were talking about one, gold, but also copper and aluminum. So this is not the 1970s, it's the 2020s. And I think in gold, just like we're seeing the trend up in gold for a host of monetary, fiscal, and geopolitical reasons, we are seeing oil prices mean reverting on the back of frankly, a lot more supply, but also softer demand. So oil is really trading on supply-demand fundamentals, and we have a bit of an air pocket right now with China slowing down here.
What happened to all the geopolitical risk, Francisco? And not only that, I'm a commuter. I can already see it in gasoline prices here in the U.S. as well, at least in the tri-state area around New York City.
Yeah, I mean, I think, look, I mean, the geopolitical backdrop has yet to affect supplies in a meaningful way. We did see it back a few months ago when we started to see the rerouting of vessels outside the Bab el-Mandeb Strait in the Red Sea through the Cape of Good Hope into the southern part of Africa. But in reality, we haven't seen any meaningful supply disruptions arising from these geopolitical tensions we are seeing today between Israel and Iran. And I do think that the oil market only really reacts when you actually do lose those physical barrels in a meaningful way. And again, that's not happening. So I do think there's a geopolitical risk, no doubt, but it hasn't happened.
I'm sorry. Hey, Francisco, it's Tim. Thanks for joining us. Talk about the solidarity within OPEC, OPEC Plus, because that to me has been one of the most important developments over the last decade in terms of oil, in terms of at least discipline, where, yes, we know Saudis always had to pick up the slack around the edge. But to some extent, it's been part of the stability in oil prices. And even near the bottom end of the range, I would argue oil prices have been remarkably stable in a volatile world.
You're absolutely right. We've seen the lowest volatility in oil prices this year in more than 10 years. The oil VIX has been trading at around 20, with volatility implied in oil options at really very, very low levels. And OPEC has a lot to do with that. To be honest, the Strategic Petroleum Reserve has also been used to the effect of stabilizing prices by the White House repeatedly over the course of the last 18 months, first releasing barrels, but then refilling and sending signals to the market. So we've seen stability coming from both ends, OPEC Plus and the SPR. So I do think that's been a factor. And then demand has been holding steady while supply came back. But we are now getting towards the end of that. And we need some China stimulus, and we need interest rate cuts, and we need them soon because the economy is a little bit on the edge right now.